Hey guys, and welcome to another episode. My name is Sam Somerville, and I'm a full-time trader, currently funded over $100,000 with both FTMO and my forex funds. And over the past year, I've been studying price action and slowly searching for the answers as to why some order blocks work perfectly fine and why others get ignored by the market. To answer this question, I've gone and backtested 4 months of data over 100 plus order blocks under specific conditions to find out the characteristics of high-quality order blocks that are being respected by the market. I applied multiple rules to see if they increased the win rate of the order blocks and gathered amazing results that I can't wait to share with you. I concluded that when specific conditions are met, order blocks have a very high win rate in the forex market. In this video, I'll first explain the basic rules and my simple strategy for trading order blocks. Second, I will describe conditions required for high probability order blocks and how you can increase your win rate. So guys, if that's something you're interested in, smash the like button, show your support, and subscribe to my channel if you're new and want to become a consistent and profitable trader. Enjoy. Thanks for sticking around, guys. We're going to get into the video in about 30 seconds. I just wanted to show you guys just the time and effort and proof of my backtesting with this little montage of the last 4 months of backtesting. You can see that I'm replaying mode on the 4 hours. I tried to do on the 15 minutes, but the video ended up being almost 30 minutes long and kept crashing because of the data. So as you can see, everything's legit. I went through back-tested bar by bar before at 4 months. And yeah, these are the results I'm going to show. First of all, I want to discuss the 3 beginner rules for valid order blocks. Number 1 is it must lead to a break of structure or a change of character. As you can see by the diagram, break of structure shows us that the market is looking to move and continue in that same direction. And we want to break a structure with a candle with a body break, not a wick break, is what we class as break of structure. And a change of character or chock is what a first sign that a market may be reversing is what we're looking for. The second rule is that it must create imbalance or inefficiency. As you can see from the diagram here, I've highlighted all the imbalance areas in blue. And I've got a zoomed in picture. As you can see, the imbalance that we define is the gaps between wicks on candles. So generally imbalances cause when big money moves into the market and pushes the market in the direction that they want very fast and eats up all the liquidity. Generally, the market does like to come back into these areas and fill these imbalances. They don't have to be filled straight away, but it's a good indication that some big entity or big money moved into the market here and potentially would defend that area. And the third rule is the order block must be unmitigated. Order blocks are considered one-time use, especially on the low time frames. What I consider to be an unmitigated order block is to have at least 50% of the order block untouched by price action after it's formed. So as you can see by this diagram, I'm showing you some mitigated order blocks where it's coming to around the 50%, the first one. We've got unmitigated that hasn't been touched at all, completely mitigated there as well where price has come in way past the 50%. And then the final one is still unmitigated, which is valid to take trades out of. Now here comes the good part. After months of backtesting and hundreds of order blocks analyzed, here are my 3 extra rules to identify very high probability order blocks. First one, the order block must be the extreme order block or the flip zone order block. First of all, the extreme order block is the order block, unmitigated, valid order block that is at the end of the leg that led to the break of structure. So pretty much if it was a bullish break of structure, it is the one down at the low of the leg. And if it was a bearish break of structure, it is the one at the highest point of the leg that has been unmitigated. Here you can see 3 diagrams showing the extreme order block. A few different ones. The first one is obvious. It's the extreme. The second one as well, quite obvious as well at the extreme. The third one, you can see it's not the most extreme order block, but it's the most extreme unmitigated order block. The second type that I've identified myself is a flip zone order block. It's not something I see on too many order block videos being identified, or maybe it has a different name. But for me, this is the last valid order block that led to the break of structure. So we all know potential legs may only have one order block, and so that's quite easy. You just pick that one. But once you get extended legs and the market isn't as clean as everyone likes to draw it up on their charts, you end up having multiple order blocks and you don't know which ones to choose. From my backtesting, I found these two are the highest probability order blocks. The reasoning I can gather from it with the flip zone is generally the market makers like to get in the most extreme point, which is easy. So they want to get in at the low and they push the price higher. And so when the price comes back to their entry point, they want to get in again and push it up. So the extreme makes sense to me. The flip zone I see is when you get a really impulsive markets, you tend to, if they want to make the market push higher or push lower, and it's already moved up quite a lot from the extreme, maybe they are happy to buy in at this point. So what they do generally is they buy close to where it would break some major structure and push the markets all the way up. And so when it comes back to this point that caused this big break of structure at a major point in the market, you end up getting this area defended as well. And it allows you to get into markets which are trending really fast without waiting for the entire pullback. So yeah, note down these, go back and back test, but these are the two that I only and ever take from now on. The second rule of very high probability order blocks is the order block must have swept liquidity. Okay, for liquidity, I'll make a whole video on this, but liquidity is essentially a zone on the chart where large pools of money is resting, such as stop losses, buy or sell orders. Essentially, it can be defined by low wicks in a bullish market, where you can see from the diagram, we've got wicks that have bought up, and then our final order block has a big sweep low, taking out any stop losses that might have been resting below these wicks and then pushed up and created that inefficiency or imbalance in the market and then eventually broken structure. Ideally, it doesn't always occur, but a really nice way is that the order block is the deepest wick on bullish order blocks, and the order block has the highest wick on bearish order blocks. It doesn't always occur like that, but it's a good rule of thumb. If you see that and that's your valid order block with all the other rules, that's definitely a high probability order block to take. And the third and final rule of very high probability order blocks is it must not have resting inefficiency or resting imbalance directly above or below, i.e. where your stop loss would be. As you can see on the diagrams, we have two perfectly valid order blocks here. We had on the left, order block that swept liquidity. It broke structure. It created huge amounts of imbalance and inefficiency. However, we had efficiency resting slightly below where the order block was. And markets tend to like to sweep these areas, as I've seen in my back testing. They don't always sweep these areas. So there will be cases where you have imbalance below and the order block holds and keeps moving on. But just so I know, a lot of the losses that I took on my order blocks that had all the other rules were losses because they had this imbalance below. So this is why I include this for very high probability order blocks as one of the ones. There are a couple ways you can manage this, which I'll make full videos about later, in terms of waiting for the sweep or covering the imbalance on your stop loss is another option. But just to be aware, if this is the case, there is a more than likely chance it could be swept. If it does hold, it doesn't mean your analysis was wrong. It just means that's the probabilities playing out. So take note of that and be aware. Use an indicator to highlight the imbalances if you need be. I've got some shared on my account, but it's something to be very aware of, as a lot of my losses came from these imbalance resting below the order block where my stop loss was going to be. But I'll go through the rules. So must be an extreme or a flip zone, must lead to break of structure or chock, must leave inefficiency / imbalance behind, can be on the 15-minute time frame or the 5-minute time frame, must be unmitigated. For my back test, less than 45% filled, must sweep liquidity. So pretty much just like sweep some lows. That can either be present on the 15 or the 5-minute time frame as well. And in general, we must not have imbalance or above or directly below. So pretty much where we put our stop loss on the order block, we don't want imbalance there. I potentially will have a look at maybe covering the balance of my stop loss, or I will put my entry in the balance as well. So I'm going to look at how the price comes into an order block that hasn't balanced where my stop loss would normally be in terms of the strategy. Hey guys, I wanted to bring it all together for you now. So what I'm going to do is I'm going to be backtesting Euro USD on the daily chart. I normally enter my trades on the 15-minute chart, but just for ease and so you can fully understand the process and that this works on any time frame, especially with Euro USD, I really wanted to show you that. So you can see me annotating here. We've got a breaker structure on the daily. We've then located the two liquidity sweeps. We've then, you can see notified by the big wicks that have taken out the lows before pushing up. Now that we want to mark out the extreme order block that we marked out first, and now we've marked out the flip zone order block in this case, the valid flip zone order block. As you can see, the flip zone's mitigated the extreme, so we remove that straight away. It's not valid for us anymore because we're looking for unmitigated order blocks such as the flip zone. We can see the flip zone has inefficiency or imbalance present, so it ticks all our boxes. There's no imbalance below the wick where our stop loss would be, and we can just set up the trade from there. Normally what I do on the 15-minute time frame is I determine where I put my entry on the order block to do with the size of the order block. I will share that to you guys in the next video. It's quite simplistic. It's pretty much just to do with if the 15-minute order block is 5 pips or less, I enter on the edge. If it's between 5 and 7 pips, I enter on the 25%, and so on like that. So what I'm just going to be entering off random areas in the order block because this is on the daily chart. But there you go, we've been tagged in and we've got our next breaker structure, and so we keep moving on. We'll just move these from the chart to start with, just clean it up so it's a bit more nice for you guys. So we got this breaker structure here. When I look at this leg, there's no high probability order blocks for me there. We've got this flip zone, has a sweep there, but it's got imbalance below. We got their extreme, it has slight liquidity swept, but not really. Sort of just resting liquidity there. So no high level order blocks there. So we're going to see what plays out next. So let's keep going. Okay. We had a sweep of the highs and we finally got the breaker structure there. So pretty much what I would consider this as a, failed liquidity sweep. So you see a liquidity sweep, and generally if you get a break of the last low, we can go for a chalk. But, now that we had a body break of that last liquidity sweep, as I've marked out there, breaker structure, we can now look for our order block. So we've got the extreme there that we're noting out that has swept liquidity, taken all those lows and pushed up. We've also got liquidity swept on the flip zone. As you can see, it's good to note there that, see it's really nice. The low wick is the last candle, which is going to be the order block there. So we mark out our extreme like we did last time. We mark out our flip zone. Again, it looks like a flip zone has mitigated our extreme. So we're just going to consider the flip zone order block here. This is what I like to do as well, what I talked about earlier, is that sometimes you need to go one time frame lower to look if there is imbalance there to make it a valid order block. When I'm trading on the 15-minute time frame, I usually look down to the 5-minute to see if there's some imbalance present, or even if there's a really nice breaker structure there. No, not breaker structure, a nice liquidity sweep. I'll then consider that really nice area for the order block as well. So, maybe it's not clear on the 15. It is good to go down just one time frame lower to the 5-minute. In this case, I went to the 12-hour, because that's kind of like the next time frame down, and it was present. So now we set up our Gann chart there that has our levels on it that we would normally determine on the size of the order block here on the daily time frame. So the order blocks are huge, so I don't use my rules on this, but I just wanted to make it super clear because there's a lot less noise on the daily time frame, and to show you that, if you don't want to do day trading, this strategy does work on, I've tested on the daily, the 4-hour, the 15. I'm sure it works on the hourly, wherever your edges, wherever you're happy to hold and, what accounts you like to trade. Looks like here we didn't get tagged, just kept pushing up. That happens. This is how it works, So I'm just showing you everything that's valid. So we'll move on to the next breaker structure. As we mark out here, we've got a liquidity sweep on the extreme there. Okay. No liquidity sweep on the flip zone, so we're not going to mark that out. We've got slight mitigation there, but I wouldn't say enough to call it unmitigated because we never broke any lows. So I'm still happy to mark that one out as a extreme order block. And the flip zone for us is just not valid for this one. There's no liquidity sweep. We can take into account that imbalance there as well. However, ideally you want to look on the lower time frame, which I'm about to do now. And you can see there's a small amount of imbalance still present there that hasn't been filled. So for me, that's fine, and we'll play it out. Let me just go back to the daily, and yeah, let's see how this plays out. I'm not actually attaching the trade long and short just because it gets in the way, but you can see that the extreme OB is where we're going to enter from. Looks like we get a nice tap in there, and we move and break the next high, which would be our target. In breaking the next high, we've now created another chance opportunity. So we just mark that out, that breaker structure. And yeah, we pretty much just go through it again, So what we're looking for, okay. So where swept liquidity? What order block swept liquidity? Okay. Is it the extreme? Is it the flip zone? Yep. Okay, they both swept liquidity. Okay, are they both unmitigated? Yep. Do they both have imbalance coming out of them? Yep, they're both valid. If either one of them is a no to any of those questions, then you just get rid of them and you focus on the other one. Mind you, it does happen sometimes that you have two valid order blocks, and okay, so it's obviously the flip zone may fail and then the extreme holds. Sometimes it can be the case that both fail. That's just the probability playing out. I never said that this is a 100% strategy, and I know it's high probability from my backtesting, 84%. However, that's not 100%. So you just have to remember that, no strategy is 100%. So it's not that you analyze the market wrong if it doesn't play out. It's just the probabilities playing out at the end of the day. And these are the probabilities for Euro USD. So maybe if you want to test this on another pair, let me know in the comments. I'll backtest it on other pairs as well. I currently am actually to get some good data. However, let me know how you go with it. Let me know if you have any questions. Hope you understand. If you don't understand, leave a comment, reach out. I'll be happy to clear this up in another video. But here we go. This is another one. Keeps moving up in that same leg. We never get a fully good pull back until now. So we've just got the extreme because all this other price action on the daily happened after the breaker structure. So we're not interested in any of that because we're not interested in getting in where the big guys haven't got in. So as we watch this, okay, it's pulling back all the way to the extreme again. We'll be tagged into our trade. And we just let it play out to break the next high, as that's us following the trend. There is, obviously, you can use this in terms of reversal trading and trough trading that I included there. It's exactly the same. You wait for the trough to happen. You make sure, it can either be a flip zone or an extreme. You want to make sure there's liquidity sweep, there's some balance present. The trough was valid with a body break. The trough was out of a high time frame point of interest or order block. You don't want to just be in the middle of nowhere on the chart. These are key areas to reversal trading, which I've gone through in previous videos, but I can make one for it. But yeah, I hope you understand that, guys. I really want to just make this clear. It's really awesome. I hope you guys enjoyed this video. Like and subscribe. It motivates me to make these videos more often and really teach you everything I'm doing here to become a profitable funded trader. So enjoy, and I will see you guys in the next one.